Okay, we have a trade recap today. Ended up having a winning trade and then getting stopped out of break even. So let's get into it. We did have news today. Um, Bullish news because actual greater than forecast is good for currency, which means bad for the S&P and Nasdaq. And so it was less than, so it was bad for currency, but good for the S&P. So we have bullish news. I don't know what I just did, but today. Okay, let's get into it. We had our key levels marked out. This trade was not based on a high time frame key level, and it was based on our other setup, other one, even though it stems from the same confluences, same approach. So let's get into it. Market open right here. We were filling in this 1 hour fair value gap pretty well, and yeah, we had news at 9, so we were waiting for that. But potential entry we could have had if we didn't have news was right here, off this fill this imbalance, stops wherever. Take profit at these hourly highs and maybe these 15-minute highs, and would have banked. Something I learned, even though I didn't even take no trades, one thing I learned today was, okay, let's see. Okay. So what I like to see is high time frame confluence getting hit key level, which we got with this fair value gap, and confirmation confluence, and a continuation confluence on the 5-minute. But what I've seen and I've learned is that what if we get the 5-minute continuation confluence first? What if we get the 5-minute retrace before we get the breaker structure or IAVG on the 5-minute? That's where we got today. So we get the 5-minute retrace first, but we did invalidate this, but I wanted to see this one get invalidated as well, because it easily could just retrace, dump. And so on ES we had a better example. So we ended up getting this retrace right here, but we didn't see a IAVG breaker structure, unless we did, but we didn't see both of them get invalidated until this candle closed. So we get the continuation confluence first. You can say this is retracement into this BPR, maybe equilibrium. No, definitely equilibrium. Actually, no, we didn't. But on the 1-minute, it is. Let's go on the 1-minute and just see. So this is our 5-minute retrace. Opened at 8:35. So right here, our retracement right there into some sort of equilibrium. I mean, mark it out right here, and then once we get the continuation confluence first, since we usually wait for the confirmation and then the continuation, and then we scale down the 1-minute, we look for another confirmation. But since we got the continuation first on the 5-minute, now we're waiting for a 5-minute confirmation, and then after that we get the confirmation, we scale down and look for the 1-minute continuation. So in this case, after we get that retrace, after we get that invalidation, we're just looking for continuation into equilibrium, breaker block, order block, or fair value gap. In this case, we got a perfect fill of this fair value gap, and at 8:43 right here. So that 5-minute, this 5-minute candle hasn't closed yet. So in this case, we would have to wait for this candle to close, which would be 8:45. 8:40 to 8:45, that candle would be closing. So now we're just waiting for that candle to close. And I'm loving my approach right now. I'm literally just trying to find any little thing I can learn every day. And in turn, that would help us. It's going to help us to get 1% better every day. And so all we would have to wait for is that 5-minute candle to close, which after this candle forms or closes, then we enter right here. Now it's 8:45. We enter, stops below this low since this is the first candle that made this fair value gap. Target draws on liquidity right above a 1-to-1. Target, maybe these 15-minute highs, all this. We failed to actually hit this hourly high, but you get it. And we probably would have got stopped out at break even depending on our take profit. No, we definitely would. But yeah. So that's the one thing I learned today. There's another thing in which actually came from the trade. So let's get into trade in general. So we did not hit a high time frame key level. Let me actually go full screen. We actually did not hit a high time frame key level. See right here, we didn't hit this high. We didn't hit no highs, not on ES either. Now we're looking like we're about to, but yeah. So this trade was based on 15-minute SMT. So we end up sweeping this 15-minute high right here on NQ. Failed to sweep it. Oh my god, it's actually too much going on. Turn off executions just for this moment. As you can see, it's kind of hard to see, but look at this. This is the 15-minute high right there. I'm trying to point it, but you can't see. And we failed to hit it. We didn't even make equal highs. It wasn't equal highs either. We literally failed. There you can see the red line and this line right here. It's a lot going on. I'm gonna delete this. What is this line? Just the macro. Yeah. We failed to hit that red line right there. So in turn, we have a 5-minute SMT or 15-minute SMT. So when we get 15-minute SMT, but we don't get a high time frame liquidity sweep or high time frame imbalance getting filled, I can automatically scale down and look for my confluence. So at this point in time, I was looking for a breaker structure or IFVG, 1-minute confirmation, and then 1-minute continuation. We get the continuation first, and then we get the 5-minute breaker structure or 1 minute. We get the breaker structure right here. And also we get an invalidation of this gap. And so after that, I entered. Honestly got a good fill because I didn't enter right after the candle close. So I ended up getting an average fill right here. I went in with 5 contracts at first and then realized I could risk more. So I added 2 more. And the lesson I learned today was the stop loss. And then again, in the past, it was a stop loss. Like this month was, and I was just, you can say, yes, I'm pretty paranoid. I don't want the same things to happen earlier this month where I literally 3 trades in a row stopped out and price going directly in her direction where I was literally liquidity in those trades. I got stopped out and then price moved into direction. And so after that, I was really did not want that to happen again. And so I've been having a bigger stop loss than I usually have. But today, okay, well, what do we put our stop losses at? We put it above or below the confluence we used. And so today we use the confluence of this fair value gap. And so really our stop loss, our entry right here, our stop loss off this fair value gap, we should have put it above the first candle that made this fair value gap. So above that. And we would have got a way better RR. Target these lows, target all that. For TP 1 to 1.8, and let's say we use our Fibonacci tool for our first take profit. I know there's a lot of going on, but just look what I'm drawing. TP1 maybe right here. TP2 either right here or this draw on liquidity, and 2 of our take profits would have got hit, and we would have, I don't want to focus on the money, but we would have made more money. Shoulda, coulda, would have. I'm just happy I executed and did what I needed to do. And so to get specific into P&L, we made 380 on our first take profit getting hit, and then price reacting off that level and stopping us out and then coming back up. Honestly, could have been another entry, but I like to keep it simple, just one trade a day. I don't want to practice over trading, revenge trading, giving money back to the markets. And we got stopped out, break even. We made this 5-minute S&T, and so yeah, there's that. We actually invalidated this, and then it was only a matter of time until we got stopped out. This honestly could have been another good trade. What a 5-minute S&T, and then after that, wait for a break of structure, INVG, wait for a retracement right here, target key levels, but we're done. And so, is anything? Oh yeah. So that's what I learned today. I learned 2 things: that we can get the continuation before the confirmation on the 5-minute, and also to actually put our stop losses where we would invalidate our trade, because it can hurt us. Either we, do too much of a tight stop loss or too much of a big stop loss, which can affect either getting stopped out or, leaving profits on the table. But I'm not trying to sound greedy. I'm just literally just trying to find anything I can do to get better. And, we learn through losses. We learn through wins. It doesn't matter, man. We learn through not taking anything. I'm finding every single possible way I can learn, because that's how I'm going to get better. That's the only way you get better. So yeah, like I said, stop loss probably should have been above this first candle that we took the trade based on. And so, overall, good trade, good execution, proud. Just got to keep it moving. You probably say, oh, you made less than you lost yesterday, but I followed my rules, followed my plan, took profits when it was needed to, necessary to. And yeah, we don't care about the P&L. We don't care about none of that. We just got to execute our edge, focus on the process, and get better every day. And so tomorrow's the last day of the month, and not trying to force anything. Tomorrow is way more volatile or heavy news than today. And then Tuesday or Thursday, we have news as well at 9. And then unemployment, NFP. Tomorrow is the second month of quarter 2, or in 2 days, second month, quarter 2. Very proud of the start of quarter 2 for me in this month of April. Just got to keep pushing, got to get better every day. Just focus on one day at a time, one trade at a time, and etc. Yeah, so shoulda, coulda, woulda, but honestly, this combine should have been passed already. Should have 4 straight wins, but these 3 straight trades got stopped out. I was liquidity, and price went in my direction. And then this was just a L. And then this was just such a long trade, bro. Good trade, good trade, good trade, good trade, good trade. Can't be mad. That is trade 11 out of 30 of the challenge. Executing on our trading plan, following our trading rules. And yeah, just got to keep it pushing. We are more than a third of the way. So, oh yeah, another thing is, this was the leading index. NQ was the lagging index, but ES was the leading index, and this is literally giving me more of a reason to take more or take trades if we have an SMT on the leading index where we didn't sweep the high or low. Because look, we literally hit this drawn liquidity and we failed to do that on NQ. And yeah, if we took it on NQ, this definitely would have been a drawn liquidity for us. And potentially none of these, no take profit would have got hit for us. Unless we use a Fibonacci tool. Would have saved us? Nope. Actually, line's almost perfect. And that's also why if we see a SMT, it's something also I learned last week. If you see a SMT, we get a break structure, potentially get out of that trade because, yeah, price can reverse. And it's not being emotional, in my opinion. It's being logical, if anything. So let's move on. We're barely up 50K. We're literally at break even still. But we can't worry about that. All we can control is what we can control is and that is following our rules, following our plan, and executing. I've been yapping, so I'm gonna end this, and yeah, God bless.